Hello everyone, I'm Taha, financial market analyst with zForex, and this is our weekly analysis. Welcome abroad.
Hello everyone, this is Muhammad Taha Bukhari, and this is our weekly video analysis. This week, we, like always, will take a look on the economic calendar, where this week we will have a lot of important data, especially for the US and the EU. Starting from with the US and the most important data, we'll have a focus on the GDP, on the PCE, core PCE, especially core PCE, GDP, especially GDP right now, we are waiting for better than expected data. Also for the core PCE, the most important or the most preferred gauging statistic indicator for the Jerome Powell, the Federal Reserve to follow, we will see as if it will be a slowdown or an increase in inflation pressures. The last time we saw some increase in CPI, and we still see a core CPI that is sticky. There is some forecasts that the actual levels right now in terms of inflation all over the world, not just USA, there may be some pressure coming from energy and also coming from food prices. Food prices are continuing becoming more high, so we'll see the impact for different reasons. The war in Ukraine, especially for grains, also a lot of lower production in many type of food prices, especially for cacao, for rice, and other type of food. So we will see core CPI, CPE, how it will be this week. Also, other elements important for the US. It's Friday. We have the non-farm payroll. We'll see if right now until now the labor market in USA still resistant, still resisting, still resilient. Resisting what? Resisting the pressure coming from the interest rate that is right now at 5.25, 5.5, where we are thinking that a level at this level, we may see a lot of pressure on businesses and even on consumers spending. So the non-farm payroll, we will see if this labor market is still resilient as we expect, or maybe there will be slowdown. Last time we had 187K, which was good, a creation of 187,000 jobs. We'll see if it will continue. We had some rumors that we may see some analysis, not even rumors, that talking about slowdown in the creation of jobs in the US. We'll see if we will see a possible surprise. Inflation slowed down, but labor market still not showing what the Federal Reserve wants. Also, the unemployment rate last time from 3.6 to 3.5. We will see an increase in unemployment rate, which the Reserve wants this. The Reserve wants going beyond 4% in terms of unemployment rate, as right now the labor market making a lot of pressure on prices, on inflation. Also, one important thing will be the average earnings. Average earnings per hour. We will see if we will see more increase on this part or not. Also, we have the ISM manufacturing PMI for the activity. So this is concerning the USA. It will be a focus on the growth and also a focus on labor markets. For the EU, it will be especially for the Germany. We have the consumer confidence. Mentioning here something important about the German economy. We'll see a huge slowdown in many indicators: PMIs, confidence, businesses, consumers' confidence. So we see inflation still high. So the economic activity in Germany does not seem great, and economic activity does not seem great, will may impact the whole region and the whole perspective by the ECB toward increasing interest rates. Especially Friday, we saw the Lagarde talking about the pressures that are coming from economy concerning and challenges that we may see on the economy toward continuing increasing rates that will be challenging for them. Also, we will see we have inflation rates inflation from Germany. Also, we will have inflation from EU, inflation also from France, from Italy, from even Spain. So this will be important to watch for the EU, especially the next meetings by the ECB or the Federal Reserve. They are so much important. ECB is facing a lot of challenges, like I said, coming from the economy. And Lagarde mentioned the last 2 times about the recession pressures. We right now are talking about a possible, especially in the US, about soft landing, the possibility of a soft landing for the US, but for the ECB and also the UK, we may see a possibility of recession higher than the US. So those data will be important. Other data that also may get attention, it will be from China. China right now, especially for today, today and the last week, there will be lots of talk about a possibility by the responsibles, the government, to find a way to boost economy. The government, or at least the central bank, lowered interest rates, leading interest rates on 5 months, on the 1 year, on the 2 year. So to help boost the economic activity where it slowed down. Also, we have the Kaixin manufacturing PMI. Manufacturing PMI will be important for it. Also, we will see how the economic activity will perform in China. Also, how this boost or this help coming from the government will help not only the Chinese economy, but sentiment around the world. As we know, the importance of China as the second economy, biggest economy in the world, its impact on Australia. It is Australia as a partner, the Australian dollar also, also an impact on oil prices in terms of demand, also in terms of risk. We had a lot of risk of last 2 weeks. We will see if there will be a change with this. There was an improvement, or there was a positive movement today on the Chinese and Hong Kong stock markets. On Asia in general, we will see this impact too. Finally, also about Canada, we will have a GDP growth rate. Last week we saw higher inflation levels than expected. We'll see this impact on the Canadian dollars. Concerning the pairs, we start with the index of dollar. We see that the dollars, we saw that we touched the 104.5 and important resistance level. We broke the 103.5. This was a good level that's playing resistance. Euro dollar, the other, it's on a weekly basis. We are maybe on an important 200 moving average level as a support. On a daily basis, it's similar to 100 moving average. On the 4 hour, we are saying that we are on a support level. So in general, we may see if at least there is shifts in terms of risk, more demand on risky type of risky currencies, Australia, New Zealand, Euro, Pound, and more. They will need to sell off on dollar. So we'll see how this will impact. Also, the pound dollar, we are on a resistance level, but we broke the important support around 126, the region between 126.7 and 126.5. On a daily basis, we are breaking 100 moving average. It's an important level. Right now, we have a lot of pressure from dollar on the pound. Why? Right now, we saw that economic activity in UK is better than expected, especially the last GDP growth rate. But the big problem is interest rates and inflation, which is continuing high, continuing making a lot of pressure. Wages are coming in higher, like the earnings or wages are higher and high. The inflation is still high. This will lead the Bank of England to increasing more beyond the level of 5.25 will be so much risky for an economy that may lead to a recession, especially the housing market, where we saw a down drop in terms of sales, in terms of average price. So, and the mortgage rates, they become so much high. Also, demand on mortgage is low, so this may lead to a possibility of recession. There is a lot of fear about the possibility of recession in the UK. So this is what's making pressure on the pound right now. For USD, JPY, the most weighted pair for a possibility from the central bank of Japan to make an intervention. We are close to the 147 level. Technically, we saw that we have this channel, the upper parallel 1, 2, 3 times. We may say 4 times around the 147. Possibility of intervention right now still possible, as the Bank of Japan president, the Minister of Finance, a lot of responsibles talking about that they are not happy with the actual rates. So we may see this. So should be vigilant about this, and should be more aware that the Bank of Japan done this, and they may do it again in the right moment. And generally, on average, we saw a huge sell-offs, more than 300 pips the last time. So in the Bank of Japan last year, especially, there was an average daily about 500 pips per day, which is crazy. So we should be so much careful about this pair. Gold is right now so much impacted by the yields. Yields right now, especially 10, 2 years, especially the 10, we touched an important level. We even touched the higher highs around the 4.35%. We are coming back. We came toward the 4.2, and on the 4 hours, even technicals are not the most used or the most preferred way to analyze the yields, but charts of yields. But in general, we may see some reversal patterns, especially on the US 10-year. This may be good for gold, where it came back from the 1885, coming back until the 1921, but we touched again the 1903. 190305 as a support level. I think the gold is waiting the yields to slow down if there is a possibility. There is a possibility, especially from the dollar, from the US, where the Jerome Powell Friday was talking, gave a tone that is not that much hawkish nor dovish. So with the actual condition, economic condition, especially with the growth this week, the data that will this week, I think gold will, especially yields, will find direction. This will affect gold directly toward upper levels. If we continue up, we have 200 moving average is an important level. So around 37 until 40, it's a good level. But until the level 47, 45, like a 40 level, like you can see a resistance level about this here around the 200 moving average, and we may see volatility taking the price until the 47, 48. But in general, I don't think we can go beyond this level, at least for this week. So we'll see the movement inside this concerning gold and the impact from the US 10-year and 2 years. The most important, like we said, 10-year is coming back, but 2 years no, continuing up, touching higher highs around the 5.1%. So it will be important for gold this week for a possible reversal, especially where silver it made some huge advancements, and this is so much positive for commodities in general. Also copper, with China coming back, or possibility of coming back of economic activity in China, this may help copper, silver, and also this may help gold up. Oil also, demand on oil, where we saw clearly that oil went to this resistance level, coming back, and there is also the bullish trend still available, still working here. So, like I said, this week we should be careful about the US, about the EU, about the yields, about the dollar Japan, possibility of intervention. Those will be the most important type of assets we should focus. And finally, gold for searching for direction. That was our weekly video. I hope it was informative. It was good enough for you. I hope for you a great week, trading week. Thank you.